Hello, everyone. I'm Joseph Giarraputo, the President and Editorial Director of Global Finance, speaking to you from New York. Shortly, I'll be joined by Crosby Mkhwanazi, Group Head, Transactional Products and Services at Standard Bank, coming from Johannesburg. Standard Bank is the largest bank in Africa. The group offers banking and financial services to individuals, businesses, institutions, and corporations in Africa and abroad. This year, Global Finance named Standard Bank the best trade finance bank and best cash management bank in Africa. Crosby, welcome.
Thank you, Joseph. Glad to be here.
Please tell us, how are your customers' needs evolving and what is driving this evolution?
Well, our customers' needs are evolving in very interesting and actually also very obvious ways. What we're finding is that obviously digital transformation is at the top of almost every single agenda. Our clients are evolving towards automation, saving cost, while still, pursuing the same efficiencies and business drivers that they always have. Risk management, yield enhancement. They're still looking for liquidity and financing from us as organizations. But it's all now underpinned with digital requirements from us as an organization.
And how is digital acceleration and automation transforming Africa's transaction banking landscape?
Well, actually, this is one of those topics I guess we could cover an entire day. So one of the interesting evolutions we're finding is that technology is becoming a lot more available and a lot cheaper than what it used to be. And a couple of things are driving this. So what we find is that obviously global standards are driving a lot of standardization, meaning that it is easier now to go and procure solutions, whether it's a payroll solution, treasury management solutions, or even banking solutions out of the box, off a cloud solution, whereas 10 years ago, 15 years ago, it was a lot of proprietary-based solutions, and therefore it was a lot more difficult and expensive to evolve. So that's what's helping the evolution and making, I suppose, digital solutions a lot cheaper and accelerating that into our clients' environments on the continent. What is also happening is that obviously global standards are also merging with the same standardization. So standardization of ISO standards, whether it's SWIFT and other capabilities, are also driving this to make this a lot more easier. So as a client, you can now go and procure something off the cloud, integrate it into various other solutions or financial institutions with very minimal work, and I think that's helping the digital acceleration. The other component, of course, which is topical globally but is no different with our clients, is the use of data. So clients now require a lot more insights from us as organizations, and they're looking for it to drive their own businesses as well. It is very critical for risk management to know what is happening in your organization, what's happening with your subsidiaries, with your bank accounts, with your investments on an ongoing basis. And therefore, real-time information with insights and any trend capabilities or risk management reports that you might get help you manage your business across the board. So data is quite an important component that is also emerging within our client base at the moment as well.
Okay, very good. Crosby, how has this evolution affected Standard Bank as a transaction bank and the products and services you provide?
So I think, again, there's a few things that never change. So our clients continue to look for expertise from us as an organization. So we are on the ground in Africa. It's our home. It's our playing ground. We have depth. We have longevity in this environment. And this is what our clients primarily look for in a bank like ours, is a partnership, the expertise to be able to navigate around their banking needs across the continent. But as it relates to technology, which is now the new evolution that's coming through, we've had to go and change quite a lot of the way that we've structured our technology. So for ourselves, cloud-based solutions is now critical to enable us to provide solutions a lot cheaper and to increase our availability of our systems from from an uptime point of view and from a reliability. However, we've also needed to change the architecture into more microservices-based solutions. So where we come from as a bank is we've had very large monolithic type solutions that we've given to clients as an online banking capability or as a lending platform. Today, we cut that up into microservices on the cloud, and then we enable connectivity via APIs. So clients are now able to buy a different suite of products from us as an organization. And for where perhaps maybe there's a fintech or even another bank that provides a service in a different way that they prefer, or from a pricing point of view, it's now a lot easier to merge these solutions together once you've got that type of architecture. So the most significant change and drive we're having is the technology architecture of our business to enable this type of connectivity, this type of data flow that's a lot easier and faster for our clients and a lot more dynamic. In fact, the need to partner, or rather to be available to connect through partners, is a massive need. So what APIs and having your solutions on the cloud helps you, it's a lot more efficient to be able to innovate with partners and fintechs and actually even big techs to be able to do that. And that's the biggest evolution we've had to drive as an organization to partner with our clients.
Is ESG important to your clients? And if so, how are you responding?
ESG is definitely an emerging theme. We're seeing that come through in many conversations, in many shapes and form with our clients, but also not just with clients, but also with shareholders, with analysts, across the board. Our own staff care a lot about ESG as well, and our staff want to know that us as a bank are responding to ESG in a very fundamental and authentic way. But I'll speak about ESG, I suppose, from a transaction banking point of view, in terms of how it comes through and what it is that we are doing as an organization to respond. One of the most interesting spaces is within the investment flows. So we have a number of global institutional investors that are investing in Africa, but we are also bankers to a lot of institutional investors, be it pension funds and government sovereign funds and asset managers in Africa that look to invest both locally on the continent as well as globally. And the concept of ESG matters a lot. So a lot of them are looking to track where their investments are going, and whereas in the past we used to provide services around the type of asset class our clients are investing in, as well as the performance of any asset manager or a particular fund, we're now adding data and insights on top of that to then couple the ESG component to help clients with their scorecards so that they can measure not just the investment or the performance of the investment, but also where the funds being headed and how they're being utilized on the continent. What we're seeing is also different needs. So the emphasis on ESG is different depending on which part of the world the investment flows are coming from. So we see that in Europe as well as West, environmental component of ESG is extremely important. So our route of funding towards suppliers that are environmentally friendly makes a big difference. But in Africa, we're seeing that obviously environment is extremely important, but also so is the social and governance. As a continent that is got a lot of goals that are geared around economic growth, that is around eliminating poverty, around employment, gender empowerment, very, very important, key concepts in our continent. And again, our investors want to know where their funds are landing and how they are able to make sure that they are getting the right level of the social component of ESG as well. Again, coupled with the global piece, which is obviously quite obvious at the moment around environmental. So are we investing, or are the funds getting towards renewable energy, or are they landing in crude oil or any other type of combustible capacity that isn't good for the earth?
Finally, how is Standard Bank innovating to continue to differentiate itself as a trusted partner for transaction banking in Africa?
So for us, innovation starts with clients and ends with clients. So we partner with clients to innovate. So we have a very clear segmentation model, and we've got very deep sector expertise across the continent. And what we do is we provide solutions across segments and within those specified sectors that we have deep expertise in, and we create bespoke solutions around those clients and around those sectors, as opposed to perhaps innovating in-house and then selling vanilla products across the board. And then I'll go back again to the architecture of our technology is a massive enabler to innovation, because when you're able to have an architecture that has easy connectivity to partners, to fintechs, to other banks, then innovation is actually accelerated at an exponential level because you're no longer dependent on your own technology capabilities or speed to develop solutions for clients. We can develop our base capability as Standard Bank and then partner with different entities to put together a solution or a basket of solutions to meet our clients' needs around what it is that they are looking for. And that's really accelerating innovation in a massive way.
Okay, very good. Crosby, thank you for joining us.
Thank you very much, Joseph. It was a pleasure.